All right, today we're going to talk about a single company that's sitting right at the intersection of, well, everything: technology, global finance, and geopolitics. It's a huge story, really, about a massive bet on the future of computing, and it all kind of blew up on one incredible day of trading. Let's get into it.
So picture this: August 22nd, 2025. One company's stock just skyrockets. It hits the maximum daily limit, a full 20% jump. Now, a surge like that in a single day, that's pretty rare, and when it happens, you just know something big is going on under the hood.
And that's the big question we're tackling today. What on earth could cause a move that explosive? And the answer, you'll see, isn't just about spreadsheets and earnings reports. It's about a tech arms race, it's about sanctions, and it's about a massive shift in the world of artificial intelligence.
The company at the center of this whole storm is Haigan Information. Now, Haigan is one of China's top domestic chip designers, and they've become a really critical piece of the puzzle in the country's national mission to become self-sufficient in high-end chips. And that mission, well, it's more urgent now than ever before.
Okay, to really get what Haigan is all about, you gotta think of them as having two engines. On one side, you've got their CPUs. Think of these as the ballast stone, the steady, reliable foundation of the company. They're built on the x86 architecture, which is basically the universal language for computers, so they're compatible with most software out there. This brings in stable, predictable money as they replace foreign chips inside China. But the other side is the DCU, and that is the rocket ship. These are their specialized AI accelerator chips, these incredibly powerful engines built just for the heavy lifting that modern AI requires. This is Haigan's domestic answer to NVIDIA's GPUs.
So what was behind that wild 20% jump? Let's start with the bull case, the optimistic side of the story. And the argument here is that a perfect storm of events just created this unbelievable opportunity for Haigan.
It's like three powerful forces all collided at the exact same moment. First, you've got U.S. trade restrictions on high-end chips, which have, effectively created a captive market for a company like Haigan. Second, the demand for AI computing power is just absolutely exploding everywhere. And third, and this one is so crucial, there's been a major breakthrough in its software ecosystem, which has always been the Achilles heel for anyone trying to compete with NVIDIA.
So that captive market idea, well, it just got very real. The biggest catalyst was breaking news that NVIDIA's H20 chip, that's the most powerful one they were allowed to sell in China, was facing severe supply problems. For all those Chinese tech giants desperate for AI power, their main foreign option basically vanished overnight, and that created this huge vacuum that Haigan was just perfectly positioned to step into.
And this is where that ecosystem part really clicks into place, and wow, it's a potential game changer. A top-tier AI firm called DeepSeek announced it was adapting its models to run specifically on Haigan's chips. This signals a massive shift. Haigan is no longer just the backup tire, the second best option you use if you can't get NVIDIA. It's now being treated as a main force, with cutting-edge software being built for it. This is the start of a real, self-sustaining domestic AI ecosystem.
But that's only half the story. For every powerful argument for Haigan, there's an equally powerful risk on the other side. So let's pivot and look at the bear case, which basically warns that all this excitement, it comes at a very dangerous price.
The first, and maybe the biggest, red flag you see is just the price, the sticker shock. After that massive run-up, Haigan's stock isn't just priced optimistically, it's priced for absolute perfection, baking in years, maybe even decades of flawless execution.
I mean, just take a look at its valuation. Haigan's price-to-earnings ratio, which is just a simple way of seeing how expensive a stock is compared to its profits, is sitting around 159. To put that into perspective for you, AMD is at 96, and even the king of AI, NVIDIA, is at 57. You're paying an absolutely massive premium for Haigan shares, a premium that assumes it's going to dominate its market without a single misstep.
Okay, a high valuation, that's a long-term worry, but there was a much more immediate and frankly, a lot scarier threat hanging over the stock, something that could trigger a huge wave of selling at any moment.
And the threat? It all comes down to this one number, 61.86%. What in the world could that mean?
So what does that number mean? It's all about ownership. Just 10 days before that big stock surge, a massive lockup period for early investors expired. Over 61% of the entire company's shares could now be sold on the open market for the very first time. This is a classic sword of Damocles situation. Just the potential that this huge block of shares could hit the market creates this massive overhang of supply that can crush a stock price for months.
So, you've got these two incredibly powerful competing forces. On one side, this amazing growth story. On the other, extreme valuation and these huge technical risks. So how do we square all this? Let's try to piece it all together and get to a verdict. When you dig into the actual technology, the picture gets a lot clearer. In the CPU world, Hygon's next-gen chip is expected to have a really impressive 128 cores, which could actually leapfrog what AMD currently offers, at least in that one spec. And in the AI chip space, it's building its own software ecosystem called DTK. This is absolutely critical. It's the language that developers use to unlock a chip's power, and it's designed to go head-to-head with NVIDIA's dominant CUDA platform. Building the hardware is one thing, but building a whole community of developers to use your software, that's a whole other ballgame. The takeaway is pretty clear. A tech gap still exists, for sure, but Hygon is a serious contender, not just a cheap copycat.
So at the end of the day, it really boils down to two completely different stories, doesn't it? You have the bull view. This is a national champion, it has a protected market, and it's riding the AI revolution. And then you have the bear view. This is a dangerous bubble, priced way beyond reality, and it's facing huge pressure from potential sellers and that lingering tech gap with the global leaders.
And that really leaves us with the million-dollar question. Is what we're seeing with Hygon the real, genuine birth of a self-sufficient domestic tech giant that can truly stand on its own 2 feet? Or is it a temporary bubble, just inflated by these very unique geopolitical circumstances, and one that's destined to pop when fundamentals finally matter again? The answer is going to define a lot more than just the fate of one company. It could define a big piece of the future of technology.